coming to our income tax class. Today we are going to discuss about the same old computation of income from house property. But the point is, some typical points we are going to discuss. This is a problem taken from income tax by Girish Ahuja. We are given with the information for 3 houses. Of those houses, only house 3 is a self-occupied house and house 1 and 2 are let out property. Since house 1 and 2 are let out property, it is specifically given. We are not assuming, we are not considering. House 1 and 2 are specifically given. House 3 is let out self-occupied property. Both the things are specifically mentioned in the question. So accordingly we are taking. Then first step we have to calculate the GAV, gross annual value. Then gross annual value is calculated based on municipal value, fair rental value and standard rent. On this we have to compare municipal value and fair rental value. In this question fair rental value is not available. So straight away we are comparing the municipal value subject to standard rent. So 4,50,000 is taken and that should be compared with actual rent 3,50,000. So we have to take whichever is higher. That the gross annual value is 4,50,000. So again I repeat, municipal value is compared with the standard rent, whichever is lower, that amount is compared with the actual rent, whichever is higher, that should be taken. So 4,50,000 is gross annual value for house 1 and 1,90,000 is gross annual value for house 2. Then second one is municipal taxes is given. So first house it is deducted from gross annual value. For all the things, municipal tax that should be deducted from the gross annual value. Municipal tax in the sense tax paid to the local authorities. It should be paid by the house owner, that is the owner of the house, and it is actually paid, not the outstanding. Then balance is net annual value, that we got the net annual value for first 2 let out property, third one is self-occupied. Then another one is deductions under section 24 we have to apply. 30% standard deduction we have to calculate. It is calculated on net annual value, that also we have calculated. Then next point is important, interest on loan. For first house it is 24,000, straight away we can deduct. Second house it is 30,000, that also straight away we can deduct. Whereas for third house it is a self-occupied property given in the question, and the amount of interest on loan it is given as 60,000. But what the rule says, it is based on any property acquired any loan taken before 1499, 30,000 for all the 3 cases it is eligible, and after 1499 2 lakh rupees for construction is taken, and only for repair it is eligible as, if the loan is taken for the repair, it is eligible as only that 30,000 rupees. In the question it is specifically given that interest on loan taken for renovation of the house. So you should keep in mind, if want you please make a note of it. Any loan taken any loan taken after 1499 for repair and renovation etc., the maximum amount eligible for the year is 30,000 only, whereas for the construction maximum interest is 2 lakh rupees. Mind it carefully, this is not the loan, this is the interest amount you can claim only to the maximum of 30,000. Accordingly we have taken 30,000 only, not the 60,000 given in the question. That we have not taken, only 30,000. So the balance is taken as income from a house property. Obviously the third house, since it is used for personal purpose, that is self-occupation, so that is fetched with the loss, right? So the important point you should note in this question is, the loan is raised for the purpose of renovation and the maximum amount eligible is 30,000 since the loan is taken after 1499. That you should keep in mind.